Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman's with us, Chief Market Strategist at BullseyeOption.com. Great to see you both. Before I get to some of the names you're focusing on, Alan, how do you feel about the market today? Of course, we've been hitting some new highs. In fact, Sam Stovall was saying 17 new highs, and that we haven't seen that. That's the greatest amount since 1928.
That's pretty impressive. I wasn't around in 28. I've been here a long time, but I'm not that old of a grizzled trader. So it's very much a positive, and I'm just looking for the fact that we continue to make new highs on a weekly basis. We did so again Friday. Today is already Thursday, so we haven't done so just yet. But let's see how we finish up the week. But things are very, very positive, and this is a momentum market.
All right. I'm going to bring in the story about U.S. Steel. So what we saw was that Nippon from Japan had agreed to purchase U.S. Steel. This was a $14 billion deal. Cleveland-Cliffs was also interested. That didn't happen. Nippon seems to be winning out. It seems to be a great way for Japan and the U.S. to take on China. And then it became sort of a bone of contention in the elections now. And it's a bit of a football. And now President Biden is stepping forward and saying that he believes that this is a concern and that this should be staying domestically because you don't want to have the U.S. as a faded industrial icon of steel. So it looks like this may not go through after all. In the meantime, U.S. Steel today is trading at $40, but 1 year it's up about 48%. So that's the backstory on U.S. Steel. Tell us a little bit about your thoughts. I know you're watching some of the technicals, you're watching the story. What stands out to you at $40 today? Alan.
Well, for me, it's one word. It's price. That's all it is. It's about price. The other stuff will sort itself out. It's very similar, if you remember, to all that noise and nonsense we had with the Elon Musk takeover, but money was made and eventually a deal was done and the stock, performed very, very well. Now, this is a pullback and it's filled that gap. That's very, very impressive for me as a trader. Okay, we've come back, so this is giving us a second chance. Now, if you look at it, this is a stock that's been between 20 and 50 here for the year. So 35 is a midpoint support. It's also the 200-day moving average. So that's a level to lean on, to buy into it. It's down 20% since January highs, so it is a better value at these levels. Now, looking at some fundamentals, which I kind of do out of the corner of my eye, the PE is 10, so it's still a ridiculously inexpensive stock. The way I'm looking to play that 35 level, the June 35 call, 3 months of time, that option's trading for about $6.50 or so. It's $5 in the money, and it's got 3 months for bullish development here in a stock that I think has a lot to surge.
All right. And so, will we have U.S. Steel and U.S. Steel workers back at front and center? And that's really what could really move this story. Tell us more. But by the way, down 5 consecutive days in a row. This may be the 6th day. I have to double check. But your thoughts, Ben, on the chart?
Yeah, that's where my focus is, Nicole, more of that recent weakness over the last few days because it came after touching on a key area of resistance, which we'll get into when we talk about the bigger picture here. We're going to begin with a more granular time frame. I've got a 5-minute candle chart queued up here, and just over the last few days, you can see some of the weakness behind me. We've sold off, again, from around that $50 level. You mentioned how the stock is up 48% year to date, but I looked, we're down 17%. I'm sorry, you said over the last year, down 17% here year to date, though. So this is a stock that has come under pressure, well-defined trend lower from that up around that $50 level to recently around 38. So it has come off, but it's tough to buy with this kind of momentum to the downside. Let's take a look here because longer term, you're going to see a trade that's been under pressure for a while, right? A stock that has, I should say. We just recently tested some key areas of resistance. Mark doesn't spend a lot of time near upper extremes, right? By definition, that's why we call them an extreme. And look at this. We're coming off that level with conviction right now, not what the bulls wanted to see. Take out 20, ultimately open up a door for a retest of some of the lows that we had seen around the pandemic. pandemic, 2021, 2022. But what I see on this chart is high conviction to the downside and basically just acceptance of that. Right now, we just ran it up into a key area of resistance, starting to roll over here. Again, this stock's been under pressure for a while and has really struggled to provide anything to get enthusiastic about, in my opinion. This run-up we've seen over the last couple of years here is really just to get us back to the upper extreme of this range we've been in. Take a look. Alan mentioned that 200-day moving average as a possible area to start buying around 34. Well, look at the conviction we're seeing as we rip through the 50-day. RSI supportive of this move lower here to the downside, as is the case with that longer-term trend to the downside here. Nicole, this one looks like it could have just hit a key area of resistance and failed once again.
Yeah, well, that's the whole thing. Alan, your final thoughts on this one?
We are in a buy the dip market. This is a stock that's getting a lot of attention. And like I said, the price performance and the news cycle is very similar to what happened to Twitter. And that ended up going off at its price. And everybody that was long was very, very happy. Now, looking at this stock, there's, you want to be aware that you have a limited risk option, have the right to be long from 35, and it's a good old buy low and look for it to go more in the money, and that option will perform very, very well.
All right, thank you for that one. Let's turn our attention over to Transocean. You're really bringing back sort of old school today, right? We have U.S. Steel. I'm feeling like a little old school today with some of these names. Rig, obviously a name we knew so well, is sitting at $5.50, which, I want to rub my eyes twice when I see that. In the meantime, you had Piper Sandler trimming the price target to $6 from $7, neutral rating. Citigroup has a $7 target, buy rating. Equal weight from Barclays. This is over the last few weeks or so. Had a beat and a miss based on the earnings. So where do you see this one headed now?
Well, first of all, Ben and I are old school, so let's embrace that. We are old school. Now, this is a stock that we did last July on this show. So last July, the stock went from 7 to 9, which is a very modest move in the stock. That's 25%, but the in-the-money options had big, big, big gains. So now this stock is down 35% since September. And it's trading about, $5.75 right now. We've been between 5 and 9 since January of 2023, so that's over a year. So 7's an important midpoint. If we get to 7, then we get a little pop to that range top. We had bullish divergence with that low that we saw in February with new lows but not new highs and implied volatility. And we're also seeing a lot of leverage buying. So what I'm looking at here is a deep in the money call for January of 2025. I'm looking at the January $4 call, which is $1.75 in the money. It's trading for about 2.25. So the expiration break even is 50 cents higher with 300 days for good things to happen. And if we if we just get to the top of this range at $9, that's 100% gain in the option. The theme for today is not old school, but it's dollar, dollar, dollar faller. And these all benefit from a diving dollar, and that's what the markets look like it's set up to do, with rates now getting cut in July.
All right. And so how do you feel when you take a look at this chart and the technicals on this one, please?
Well, there's a lot to unpack there, Nicole. First of all, in terms of the old school aspect, your last guest talking about 17 new all-time highs this year. I haven't seen that since 1928. Alan said he hasn't been around that long, but your last guest also talked about how prior years that we had seen anything along those lines was 1987 and 1998, kind of a little bit of a warning in that hint, that tone he mentioned. So, Alan, I know you were around in 98. I'm not sure about the crash of 87, but let's talk a little bit more about RIG in terms of what we're seeing here and this stock, because Alan's talking about the dollar going lower after today's PPI number and what we've seen in rates recently. I wouldn't be too sure about that, but we are seeing some momentum to the upside in shares of RIG on a more short-term chart. So it looks to me like Alan's kind of getting sucked into this enthusiasm here as we rally up to near $6. You can see bottoming out around 4.5 after earnings. And as I take a look here, again, a very granular look at price activity, I can see areas of consolidation that are forming at higher and higher levels, right? As we pull out the microscope and that fine-tooth comb and really identify where it's paused. But again, this is a 15-minute candle candle chart, we're talking about 30, 40 cent increments here. So let's take a step back. Let's look at something bigger. And when you do that, the picture becomes pretty clear that Allen's kind of trying to buy into this middle of this range that we've seen, with still some heavy lifting to do here before the bulls can really declare a bottom. Because look at this. We've been in a long-term sideways consolidation, very mature. You're talking about the lows that we saw back in 2020, pandemic lows, or off those lows, I should say, the fall of 2020, it looks like. And then you've got some highs around this $8, $9 level, which is a key area, an area of balance that got formed back in the beginning of 2019 and throughout that year prior to the breakdown here. So I wanted to take another look at price activity here. And just one more step back, right? Add a little time on. This chart is actually a daily candle chart here. You can see the triple tops that we formed 2018, beginning of 2019, the selling that came into play. But look at this. We're going to add some time on, go all the way back when the stock was trading up around 163. That was back in 08, 09. 4 areas of consolidation my eyes drawn to right now. Basically, Nicole, the way I see it, as long as we hold below 15, very limited, and really not much to get enthused about here right now. Stock currently trading about $5.50. I mean, it's been in a consolidation area here going back to, we're talking 4 years around this level.
Right, right. Final thoughts on this one before we get to gold, Alan.
300 days. 300 days till expiration, long from 4. It hasn't been to 4, so in a couple of years here. So I like this potential upside on this stock, and we'll see if the expiration break even is 50 cents higher with almost a year of time. It's just math.
Okay. All right. Okay. And next up, we're talking all about gold, Barrick Gold. We talk about the miners. I mean, we should note that spot gold itself hit almost $2,200 on Friday, went up to $195, I believe, right? So that was a new high, but we have seen some consolidation in this group. And I know I don't mean to steal Ben's thunder, but I did see RSI for gold itself was at a level of about 84%, showing that it was heavily overbought. At this point, when you see Barrick Gold today at $15 and change, where do you think it's headed and why?
I love this chart. Now, Ben is going to have to agree with some of this, I think. Now, if you look at this chart, this is a stock that's 50% off its 2020 top. Put that in perspective. Gold is at all-time highs. This stock's 50% off its 2020 high. So it's also down more than 10% so far this year, with gold being up and the market being up, obviously. So we've been between 14 and 20 for a year. But what's most impressive for me is that for the last 5 years, we've had a series of higher lows. First, we had 12, then we had 13, then we've had a kind of double bottom here at this 14. So that, to me, is very impressive, a series of higher lows. We're about 1575 right now. I'm looking at the January again. January option, 300 days, $13 call for 375. So the expiration break-even's $1 higher. It's got 300 days. And if we just get to the 20 level, that's important here because that's the range top. That 20 level, this was a $30 stock in 2020. Just getting to the 20 level, which is the top of this overall range, this option will gain 100%, and it has almost a year of time.
Yeah, and I will say Peter Schiff, I mean, he is a gold bull, but he was saying that the lack of participation from some of the miners and that there is still room to run for gold itself and that the whole group, he said explosive move up can't be far away. So that would go to your thesis there. Tell us a little bit, Ben, about your thoughts on Barrick Gold today.
Yeah, Nicole, you were talking spot gold. Futures actually got above 2,200. I think it was 2,203 I saw them top out, if I remember correctly. Alan said I was going to have to agree with some of that. Nicole, I don't agree with any of it. Let's take a look at the trend lower here we're seeing. First and foremost, the hourly candle chart. So we're going to kind of jump right into an intermediate time frame when the stock was trading up around 1850. You can see end of December, beginning of January, it's been nothing but lower, down in the Feb lows, down around 1376, trying to recover here, but still unable to take out anything really significant and appearing as if we're starting to roll over here again today. All this banking on lower dollar, as Alan mentioned, right? We're talking about rates to the upside, though, as PPI came in higher than expected. We're also talking about a trend to the downside here as values formed at lower and lower levels. So let's not dwell on this hourly candle chart here. As we add a little time onto the discussion, you're going to see this is a stock, they can't even get this thing through the pivot here of 18 it's been struggling. Alan mentioned a couple bottoms. I see what he's talking about here above the October 2022 bottom, but this is range bound contained right now, very random in terms of price activity. So, okay, maybe I agree with the idea that we could see a little bit of rotational price activity within this area, but tough to get excited about anything here still on this time frame. Again, we're looking at a daily candle chart here. We're going all the way back to the beginning of 2022. Let's add a little time on, one more step back, and you're going to see a similar pattern playing out. Trend lower, right? Areas of value that formed at lower and lower levels. Stock was trending up around 56 back in 2011, and again, get above 18, maybe that's something to smile about, but really tough to declare a bottom at this point, Nicole.
Okay, thank you for that. We'll give you the final word here, Alan Nachman.
That is a lovely wedge on the chart. I've noticed a theme here for the last 2 or 3 years that we've been doing this, I think. I'm bullish, and Ben will get bullish after the stocks break out. So it's a different approach, but at some point, I like where I set up as far as it goes probability-wise, and I did get a maybe, so maybe is something.
All right, great to see you both. Thank you so much for the big three today. Ben Lichtenstein on the charts, Alan Nachman, bullseyeoption.com. Thank you both, really appreciate it. Coming up next, we're going to spotlight the big TikTok story. What happens next with TikTok? And we have Dan Ives from Wedbush. He'll talk about that. He'll talk about possible